And as people roll in, thank you for those who are jumping in now. I'm going to glance through the attendees here. Hopefully we've had some people who are following us from last week. Last week, for those who weren't around, we had a discussion that was a little bit more general. It was a chance for everybody to get together and discuss, how is everyone reacting to all this craziness that's going on. And it went great. A lot of open discussion, and that's exactly what we want to have here too. It's going to be a little bit different this time around. There's going to be a lot of open discussion that we want to have at the end, and we want to give people time. We definitely encourage, feel free to jump right into the chat, chat amongst each other, chat to us, ask any questions that you have. Don't wait until the end. But this one's going to be a little bit different because we're very lucky to have a guest here, and that's Joel Friend, accountant and owner of Joel Friend Associates in Florida. And he is someone that I reached out to, and he was very open in explaining the CARES Act and specifically the Paycheck Protection Program. And I was very impressed that he was able to explain it to me. I'm not the brightest bulb, and he got it through to me very quickly. And I was like, hey, this could be beneficial to other people too. So Joel is going to be joining us, and he's going to walk through basically the first portion of this session. It's going to be him walking through the program and explain it in plain English. Here's all the details that you need to know. Again, feel free to ask questions. You'll see how we're going to break it down in the agenda right now. And then from there, we're going to go into opening it up into discussion. What are people's reservations? What are your particular situations that you're dealing with? We're also, what's really cool is Joel has a spreadsheet calculator that helps you figure out, okay, what are my costs? I can get all this kind of information in place, and I can see what my loan amount actually will be and start planning ahead that way. And we're going to invite people, if there's any brave members of the audience here that want to come in and get on the air and share some of their figures, we're happy to actually use that. If not, Tom's been good enough to provide us with some figures that kind of apply to his time as an MSP. So we'll go through that regardless either way. But it's 10 o'clock right now. We got 87 attendees. That's awesome. I do see we have one hand raised. So Richie, this is, and also talking is permitted. We're actually encouraging that. But with it being 10 o'clock now, let's jump into this agenda and go through in a little bit more detail how this is going to work for those who weren't with us last week. And thanks again to those who were. So if you go to how to participate in the agenda doc, you'll see that for those, this may be old hat, but now this may be like each of ours like 99th Zoom call like this week. But for those who aren't familiar with Zoom, it's got some functions that we're going to use here. The first one's chat, and there's a button down at the bottom of your panel you'll be able to see. The important thing to note here is that when you're chatting, if you want everyone to see it, make sure that it says where it says to, it says all panelists and attendees. That way it's going to go out to the whole group. If there is something that you just want us to see privately, you can change the setting there to just panelists. So that's one way to get involved. The second way is to use the Q&A. And this is like for this specific topic, since we're going to be talking about potentially sensitive information, financials, we're inviting people to use the Q&A. And there's an option that Sammy has enabled, which allows people to ask things anonymously. And so if you got something that's sensitive, feel free to go in there. There's a little button you can check to make sure that your question is anonymous, and you can ask something there. And then raise your hand, just like, let's see, Richie is doing. Raise your hand if you want to jump in, if there's something that you want to comment on, or if you have a question. You can feel free to do that in chat, but you can also come in and we'll open up your mic for you. And we're definitely encouraging that. That's something we did last time around, and I think people really responded to it. It was pretty great. Okay, so that's how we're doing things. One final note that's housekeeping. We are recording this, and we're going to be as fast as we can getting the recording out to everyone here as soon as this is done. If it's not going out today, it's going out tomorrow morning for sure. I love that everyone's saying, hey, where they're from. We got people from all over the place. One of the great things about everyone jumping in on this call is that it's an opportunity to connect with each other and to get a sense of how everyone's dealing with it. What's really cool about that is everyone, depending on what area you're in, what you're seeing can be very different. Some people who are in urban areas are almost living in the future a little bit compared to people who are just now starting experiencing the more strict lockdown procedures. But feel free, connect with each other in the chat, go wild. And with all that said, now I'm going to kick it over to our other panelists here and let them introduce themselves. So for me, first, I'm Jonathan Crow. I'm director of here at Ninja RMN. Tom, how about you introduce yourself?
Thanks, Jonathan. My name's Tom Watson, and I'm Channel Chief Advisor at Ninja RMM. And I'm here as a former MSP owner, doing some content with Jonathan and others. And what I try to do is bring to you guys some of my experience as a former MSP owner and how that relates to what we're doing. And today, kind of the portion I'm going to bring is I brought some numbers that Joel's going to punch into a spreadsheet, kind of show you how this whole thing works in terms of getting some of this money.
Great. And Joel, thank you so much for being here. We're really, really happy to have you here to explain all this. Why don't you introduce yourself?
My sincere pleasure, guys. My name is Joel Friend, owner of a tax and accounting practice, a full service entity here in South Florida. Previously worked for KPMG, Pete Marwick, which is a very large international tax and accounting practice. Also taught at the graduate level at local universities. And I'm here really today to be able to provide the assistance and really water down and really bring hopefully to life what the PPP is, what the EDLI is, as far as the two loan programs that are taking shape associated with COVID-19.
Great. Well, thank you again. And just to kind of read the room here, we've got a poll we'd like to launch for starters. Sammy, if you wouldn't mind doing that. So this first one is going to be, have you had any clients that have canceled or they've requested to scale back services? So let's get a sense of where people are at with that. The second one here, have you ever taken out a bank loan or line of credit for your business before? And this is going to give us a sense of where people are at and help guide the discussion too. So we're going to give it a few more minutes. Got tons of responses coming in. Once I end the poll, then I'll definitely share the results for you. Looks like we're kind of leveling off, so I'm going to go ahead and yeah, let's go ahead and end the poll, and let's go ahead and share the results. Okay. So split pretty right down the middle with have people had clients cancel or request to scale back services. As a follow-up to that, just in the chat, wanted to ask, feel free to answer here in the chat, what vertical? That's something that we're very interested in. We know there's the obvious ones like retail, hospitality. Those places are hit pretty hard. But curious, for the people who have seen a client request to scale back, what vertical? And maybe that can give us some discussion here too. And then, of course, the taking out the bank loan, interesting to see about a third of you have, 2/3 haven't. So, Joel, that helps inform you. This will be a great resource for you to understand kind of what's kind of different about this loan in particular. So going back, stepping back, giving you a little background, I'm sure as everyone's aware, last Friday, Congress passed the Coronavirus Aid, Relief, and Economic Security Act, CARES, which is very warm and fuzzy sounding. I've given a link to the full text. If you have all the time in the world to read 800 pages of text, you can do that. But you don't have time for that. That's why you're here, and that's why Joel's here. At a very high level, it includes $350 billion allocated to helping small businesses keep their employees employed. And that's what's being referred to as the Paycheck Protection Program. That's really the big immediate aid that is included here, and the most relevant, in Joel's opinion, to the MSP owners and your clients too. So Joel, why don't you hop in and let's talk about what makes this the PPP different from other loans, first of all.
Well, I think if you look at, and they do have an economic injury disaster loan. That is another loan that's actually featured and put forth by the SBA. The difference between that type of loan and the PPP the Paycheck Protection Program is the requirements that are necessary. Most business owners, I believe less is more. Why am I going to give all of my financials? Why am I going to go ahead and go through a very elongated process or a cumbersome process as far as divulging all of my information, which is fine. There's nothing wrong in doing that with respect to obtaining a loan. And that you would have to do under the economic injury disaster loan. And there's certain values and benefits for that. But the PPP is a process where it is extremely easy, very efficient to be able to just walk into your local bank. And they're actually talking today, and I've been getting conversations back and forth from various financial institutions where they're looking for all of this information just to be uploaded. There is no personal guarantee. The loan is what you call non-recourse. And if you use the proceeds from the PPP based upon covering and supporting and continuing your payroll and other allocated, which we'll talk about in the spreadsheet in a little bit, but other allocated expenses, the entire loan is forgiven. Not only is it forgiven, but it's also not going to be includable in your income when you file your tax return next year. So the differentiation between the economic injury disaster loan, and there is a built-in carve out of a $10,000 grant there, versus the PPP, there's a lot of distinctions. But in seeing the responses that we just received from that brief questionnaire, it seems like 2/3 of the clients that we're speaking to today really never did a loan. You know, they grew their business organically, and therefore this type of loan is something so easy and effortless to achieve, and it's also forgiven.
I think that's a huge thing. And when we were talking, I think the phrase you used was basically anyone with a pulse.
Anyone with a pulse.
Very,
if you have payroll, if you have a pulse, you go into the bank, they will go ahead and extend you this loan. They will provide you this loan, which is forgivable, provided that you meet certain criteria.
Okay,
Joel,
so let's start talking about. Oh, sorry, go ahead, Tom.
Joel, now, looking at from the perspective of MSP owner, very hesitant often to work with banks, very hesitant of the government access to accounts, that sort of thing. Before maybe we go any further, can you kind of tell us a little about how that's going to work in here and how it might be a little different?
Okay, well, what I'm recommending my clients, and I would be more than happy to engage on a one-to-one basis hereafter for those individuals that may be so inclined. But what I'm explaining to my clients that have reached out that we are actively pursuing this for is saying, let's go ahead. It's providing payroll, providing your 941s, your 940, providing information that we have or we should have readily available. The financial institution will then extend the resources. They will provide this bucket of money directly to the business owner. And that business owner needs to go ahead and deploy these funds, the utilization of these funds, deploy them for payroll, rent, utilities, communication expenses, and provided that we do such, though that entire amount of funds will be forgiven. What I'm recommending is my clients go ahead and open up a completely separate bank account with their financial institution, because again, it was going to be a lot easier, cleaner, to be able to, on the back end, support that we use this money appropriately, just providing one bank account versus having a bank account that is commingled with all other various funds.
Well, that's a good point. And let's get into that a little bit more in a minute. But Sammy, if you don't mind to go back to the agenda doc, before we dive into some more detail about what this loan includes and what the stipulations are, what it covers, what it doesn't. A really good comment from Larry French here, and he's saying, so what? You're saying there's free money, go get it? I don't like this attitude. And so, Joel, Tom, just kind of curious about maybe this applies to kind of loans in general. What are some of the downsides? should everybody actually be looking into this without question, or are there cases when you shouldn't?
Jonathan, absolutely. My view on this is one thing, is that we don't know what we're going to come up against in the coming months or how long these repercussions are going to last. And so it's good to secure your money now, and you might be waiting for a while, and Joel can get into that. The other thing I want to mention is nothing's truly free. We're going to pay as taxpayers for this down the road. This is going to come to us at some point. So you might as well get the money, because everyone's going to have to pay it back at some level, I believe. So while they're forgiving it, they still have to recoup that money in some way. Joel?
You know, the economic, tsunami that this has caused on all businesses, it's going to have a ripple effect throughout every single industry. And as one of the participants just mentioned, there's certain industries that are even more gravely affected, such as the dental community, which we can talk about as far as moratoriums of even practicing. But all businesses are going to have an adverse financial impact from what is now taking place. Not to take advantage of this, not to go out and actually receive, to be able to keep your workforce at bay, in order to be able to support yourself, to be able to defer and pay for the expenses of rent and telecommunications. I would find it to be unwise as to not be able to reap this benefit, just to provide you a little bit more financial security. Because as you said, Tom, we do not know. We have no idea as far as what the future is going to hold, how long this pandemic is going to take place. Is there going to be more shelter in places beyond April 30th? So not taking this when it's available, when the government is offering this to us, in my opinion, and what I'm advising, does seem unwise.
Exactly. We're getting a lot of great questions here, but I think a lot of these, Joel, will be answered by filling in that sheet and some of the explanation you're going to give on those numbers. And I think then we can come back to a number of these questions I'm seeing in the chat, and we can definitely open it up and have a couple people come on and talk to us about these as well.
That sounds wonderful. Should we go ahead to the spreadsheet at this point, Tom?
Actually, before we do that, let's just go down the agenda doc. One more thing, who is eligible is a big question right now. And specifically, we're getting some questions from a few people who are smaller. But to clarify here, we've seen in the headlines, everyone's saying small businesses with fewer than 500 employees, but they're also sole proprietors, individuals who operate as sole proprietors, individuals who operate as independent contractors. Can you talk about that, smaller owners who are kind of startups themselves?
Most definitely. When the PPP program is very unlike the economic injury disaster loan program. Although there's certain things where they do overlap. The PPP, as long as you are a business, a sole proprietor, an independent contractor, even if you are filing a Schedule C on your personal income tax return, provided that there was profitability that you took and you paid employees from such, you are entitled to the PPP program. So that would be permissible under these guidelines. Hello?
Okay, and now, let's jump into the spreadsheet, because I think you're right, Tom. I think this will help us go under what you can use the loan for, a lot of some of these detailed questions.
Yeah, because we're getting a lot of questions in there, and we're going to try to hit as many of these chat questions as we can. But I think that we'll kind of, if you don't see it answered in the next piece that Joel goes through, then kind of repost your question or rephrase it in a way, and we will come back.
All right, the spreadsheet that you see on screen now is kind of the spreadsheet and the model that I'm using to present information to clients that are coming to us that are concerned and they want to take advantage of the PPP. One of the most important things that we try to look at is saying, okay, how much are we entitled to? How much should this business owner actually receive under the PPP program? This spreadsheet will kind of go through that mechanism, and the numbers that emanate from this spreadsheet would be then transferred to the payroll, the Paycheck Protection Program application form furnished by the SBA, which you would just simply turn over to your financial institution, your bank, or upload it to them in some fashion. So let's say you're an organization and your salaries for the year of 2019. So we're going to be looking back to the 2019 year. In 2019, let's make the assumption that this business had payroll of $540,000. This is inclusive of you, the entrepreneur, the proprietor, as well as all of the employees of said company. We are calculating the employer portion of Social Security and Medicare. This is formula driven. Also, there's FUTA, which is federal unemployment tax, and SUTA, state unemployment tax. This is going to vary based upon location and to the extent of how many people you have employed during the course of 2019. It's not going to be a tremendous number. However, when we present this to a financial institution, we do want to crystallize this and make sure that the number that we are reporting is true and accurate. Let's also, part of the employer cost of his or her payroll is corporate sponsored health insurance. Corporate sponsored health insurance is the dollar amount that the employer is paying on behalf of his or her employees. And let's just make the assumption that it's $25,200 for the entire year of 2019. The next line is the employer amount of contributions that we're making to the organization's 401k plan, SEP plan, simple plan. For this calculation, let's make the assumption that there are no additional benefits but for health insurance. Based upon what we just talked about, this organization would receive $126,356 pretty much immediately, okay, under this SBA 7A program dubbed Paycheck Protection Program, the PPP. These resources, these proceeds are then to be utilized for the next 8-week period over the following allowable expenses, which we're going to talk about now. So the formula says we're going to take the total payroll cost that the employer incurs over the course of 2019, which comprises of such. We're going to take the average of that and multiply it by 250% or 2.5 times that dollar amount. Make sense so far?
Yeah, Joe, we've got a bunch of questions coming in, but I think we should keep going through this, and we're going to get to every one of these questions we can.
Wonderful. Just wanted to kind of have an idea. Now, let's make the assumption that you as the employer pay your employees, and what you feel is that in 2020, that what we're in right now, that your average payroll, okay, for every 2 weeks, which is inclusive of the health insurance, the employer's share of Social Security, Medicare, etc., sums to $20,769 per 2-week period. Remember, this program, and we are allotted this sum of money to be spent in these various categories over the next 8-week time horizon. Provided that they are spent within this time period, then we're talking about forgiveness. And this dollar amount of the 126 not to be included in your organization's income tax return in 2020. So we just put in payroll. It amounts to this period of time on row 18 of $89,000. Now we have various expenses that we're paying to, let's say, independent contractors, group health insurance. This is all for a 2-week period, or 2-month period, 2-month period over the course of 8 weeks from when we receive the resources from our financial institution associated with the PPP program. Power and light, telecommunications, alarm monitoring, and any loans that you have at this point in time. So what we see here is we see a scenario that even after all of our expenses, and again, depending upon what your rent is, you know, how much your health insurance is, what your payroll cost is, if we just use this fact situation here, there has been an underutilization of the PPP in the tune of $24,124.94. This underutilization of the PPP will revert to a loan, and depending upon the threshold of that loan, it could be 0.5% that has to be paid over a period of, let's say, 2 years. So it is also very, very comfortable, and it doesn't put a financial onus on the business owner once everything does resolve. If the business owner says, you know what, I don't want that loan with the SBA, we do have the prerogative of returning that money with no prepayment penalty. And if all the other expenses were appropriately paid, okay, the all but the excess will be forgiven.
And so, Joel, this gets into what you're talking about with setting up a separate bank account, right? Because what happens, like how, yeah, when this is going to be, I guess, audited or confirmed in a way, like how does that process look like?
Well, that's a very, very good question, Jonathan. That process works as follows. At the end of this 8-week period, okay, and the financial institutions are still, you know, figuring out how to actually assemble this, but at the end of that 8-week period, we're going to have to present to the SBA, vis-a-vis through the financial institution that we're dealing with, that we utilized the proceeds properly, that we did not utilize this to acquire equipment, that we did not utilize this to buy supplies, but we truly utilized it for payroll and these earmarked expenses. My belief is that if we have a separate bank account, all we would need to do then is ensure that during this 8-week period that all payroll is run through that bank account, rent is paid through that bank account, electric is paid through that bank account, and so on and so forth, which makes the whole idea of presenting something very tidy and clean to the financial institution, thus the SBA, to be forgiven, effortless.
Now, Joel, I have a question for you. Let's say someone on the line has already cut some resources, such as a technician, or maybe they've cut their bookkeepers and a family member is going to help out with some of that bookkeeping function or something like that. How would you kind of address something like that in this situation?
You know, the way the program is going to look is they're going to have a certain period of time. In this case, it's going to be February 15th through June 30th of 2019. And they're going to take that date and they're going to juxtapose it from the time period of February 15th through June 30th, 2020. If someone was let go, if someone decided that, you know, we cannot hold on to these employees, we are in a financial, you know, state where we just cannot. If we lose full-time equivalent employees, what they call FTEs, full-time equivalent employees, during that time hiatus, or if there's a reduction, even if we use these proceeds for the various categories, there will be an amount that will not be forgiven. The whole purpose of this program is to stabilize the economy, to allow the business owner to keep all of their key valuable human capital in place, not to let those individuals release into the marketplace, but to retain them. And of course, the business owner can pay himself or herself. If there's a family member on the books, there's no reason why they're not being paid as well, provided that they are providing services to the entity, and all of these various expenses. So from a business owner's standpoint, to maintain his or her human capital, to ensure that the same human capital and service providers are there from day in and to day out, for the business owner to pay himself or herself and whoever may be on the books, as well as to cover health insurance, rent, utilities. This program is wonderful.
Now, are you speaking to the fact that I'm sorry, go on, Jonathan.
I was going to make one quick note about the employees and the forgiveness. I've also seen it noted that there is an asterisk there where if you're able to restore an employee or restore that pay that was cut by June 30th, then your forgiveness is restored. Is that what you've seen too, Joel?
There's two thoughts of that. The answer is yes, Jonathan, you are correct. There is a period of restoration of employees, and they're using June 30th as that point, because on a lot of on state forms and even federal forms, you have to state how many employees did you have employed on that last day of that period. In this case, the quarter ending June 30th. But the formula also states that while we may have restoration of the number of full-time equivalent employees, if there is a decline in the overall payroll to your workforce to an extent of 25% or more, you also will be pro-ratally reduced as far as the amount that is forgiven. So the whole purpose here is to say, look, employer, we want to make sure that you keep your employees at bay. We do not want those employees to go to unemployment. We want you kind of to act as the unemployment agency for us on our behalf. So we're more than happy to extend you this money, which allows you to pay yourself. Because think about this. If you are an individual owner, if you and your family earn north of $189,000, you are not receiving a check from the government. However, if you are a business owner and you are paying yourself and possibly a spouse, a loved one, a family member that's also engaged within the business, you can continue to keep them employed, as well as your other staff members and workforce. That human capital is kept intact, plus cover your health insurance, your rent. So this is a mechanism that allows the business owner to continue to pay themselves up to, but no more than, an equivalent salary of $8,333 or $100,000 a year. Anything over that threshold, well, that amount will not be forgiven. But to the extent that each employee earns equal to or less than $100,000, it will be forgiven, plus the rent. So it's a very, very fair formula, and the benefit that it has to the business owner, I feel, it should not be kind of put on the back burner, but rather we should engage and to ensure that we do make application for this, because as Tom said earlier, and I reiterated, we don't know what the future is going to hold. And it's better to get something. And then if there's another wave of something very similar, or there's a continuation or phase 2 of the PPP, we're already in the process. We're already there.
Yeah, I think it's a great point. I mean, one way to think about it is you could have, if you're doing your business in a way, hopefully you have stuff set aside for a rainy day. Do you have set aside for a rainy month, multiple months? So yeah, I think I'm looking back at all the comments and tons of questions, and we're going to try to get to as many as we can. They seem to fall in a couple of buckets, and there's a general reaction to all this I've noticed here and in other discussions too. this seems a little bit too good to be true in a way. Like people are asking, wait, this covers payroll and rent and all these other things too. So I think there's that reaction that would love to get your thoughts on. And then a couple other things to note, the sense that like, I've noticed people now commenting on this. There's a concern that the funding for this, the floodgates are going to open. Everyone's going to be applying, and this funding is going to drop down pretty quickly. And there's been some reassurances from the Treasury Department that they're going to go back to Congress to ask for more. But I mean, that's a big unknown. So I guess, Joel, do you have any advice for people who are trying to grapple? This is a lot to try to understand. There's a real impetus for moving quickly here potentially, but also wanting to like not move too fast because we're talking about finances here. This is kind of scary.
You know, when you're talking about a person's finances, and what I have seen at this moment in time, especially in the last 2-week period, you can see the anguish, you can see the hurt, the psychological pain that people are going through as it relates to what can I do for my employees? What's going to happen to my business? You know, this is something that I spent years as far as developing. We develop relationships with the people that we work with. Is it too good to be true? You know, it's a program and so forth that I have not seen the likes of in my practice years, nor from a historical standpoint have I ever seen something of such magnitude. Do I think we should act quickly upon it? The answer is yes. I do feel that there's going to be potentially Congress having to go back and get more money. Do I feel that that will happen? In my opinion, I would say yes. I don't think they can leave individuals without, at this moment in time, if they're truly, truly trying to be able to keep their employee base at bay and to cover the essentials. You know, commercial rents are very, very different than residential rents or mortgages. You know, when you're talking about commercial rents or mortgages, you know, it's a very different concept than the forgiveness that Congress is asking the banks and the financial institutions to make, even for non-evictions. So again, not to be able to take this opportunity, not to be able to say, wow, are you telling me that I can get a forgivable loan? I have no personal guarantees. Okay, there is no liens on any of my AR or assets. All I have to do is to be able to present payroll that I am still a going concern, that I still have payroll today, and that I need these resources to continue on as a going concern because we don't know what tomorrow is going to bring. We already feel that, and as we said, we are losing 50%, it seemed like, in the question that we had in the polling from the onset of this meeting said, we have a reduction of services that clients have asked for or an elimination of those services. We don't know what that's going to look like a week, 2 weeks, 3 weeks from now. So from my vantage point, I do not see why somebody would not take advantage of this opportunity today.
Now, Joel, I don't know if you saw in the numbers I sent over, but one of the things that some MSPs might do is use what's called like a knock services or an external help desk from another company. And I don't know if you could speak to that. Sometimes those other companies will be foreign entities. Sometimes they'll be U.S. or they might just be contractors in some way. So it's kind of I've seen a couple questions about it already in the chat as well.
You know, if you are working truly as an independent contractor where you have a certain project, somebody takes over, the answer is yes. You even put $3,000 here on road 21. That is a permissible expense. However, anything that you are paying off our shores is not going to be considered such.
What if you're paying a knock services help desk service that is U.S. based? It's a U.S. company.
For services, the answer is no. It's to individuals.
Okay. And then I had a question too. What do you think are the big pitfalls here where a company, someone could get in trouble with this either financially or down the road with some type of auditing done about it. What do we need to watch out for to make sure we don't have to have a situation later on? I know you talked about the bank account, and that's obviously one place to start, but what else do you see being a potential problem?
Look, if you look at the questionnaire, you're making an admission that you need these resources to continue because you are uncertain what's going to take place down the road. You need these resources because with not knowing that, you may not be able to make payroll. You have a difficulty in making sure that you can pay your individuals. So I think if we are able to have something that's very, very tidy to ensure that we have the ability to allocate these expenses appropriately, to ensure that the payments that we're making fall within the permissible categories and buckets, there should be nothing, zero, that anyone should be alarmed with. If we use this money, this $126,000, and we hit our head and we decide that we want to use all of those proceeds to pay off our house, that's a problem. But if we use these with purity, if we use these with the correct intent in place, nobody should be concerned. And my recommendation of having a separate bank account is only for the ease of presentation, to be able to showcase that these monies were truly used and dispersed in these appropriate categories, without having to showcase our other bank accounts and have monies that are not necessarily paid here or for these categories mixed in or commingled.
So Joel, I have I'm seeing questions that for obviously MSPs, they're thinking like, okay, they're hearing core expenses, and we're seeing what we have in the spreadsheet here: payroll, rent, benefits, all the things to keep the lights on from an operations standpoint. When you're an MSP, you think about, okay, what about the tools I'm using? What about my RMM? What about my PSA? And I'm wondering, so I guess the first very straightforward question is, are those things forgivable?
I think you have to look at certain expenses on a case-by-case basis. And from this conversation, as far as me being a panelist, we're going to look at it from a very generalist standpoint. So the blanket answer that I would have in looking at the code is, these expenses that are listed here are 100% permissible. Okay? Anything but for these expenses, you would definitely want to talk to your financial advisor and find out what you feel comfortable with. But these expenses that are listed here, that are defined here, are permissible, and if utilized properly, a higher amount would be forgiven of those resources spent within these categories. And the monies would also not be includable in your taxable income.
I mean, I guess one way to think about this too is, if you're taking your payroll, your rent, all these things off the table for the next 2 months,
what a relief!
Paying all your services is,
Wow.
That alone is a great thing, right?
Not only that, I mean, depending upon what you pay yourself, besides paying all of your fixed expenses, which are going to be there irregardless, you also have resources to pay yourself up to, but no more than $8,333, equivalent to $100,000 per year.
So utilities,
and that number,
there's a little bit of a
$8,333 is per month. I want everyone to understand it's per month.
Sorry to interrupt. There's some Matt Mock brings up a good point. Utilities wise, so we have telecommunications, phone. We have internet expense. Interest. We have internet as an expense too. When we're talking about utilities, Matt's thinking like, well, okay, he's thinking AWS. He's thinking some other things that they need.
That's a fixed cost. When you're looking at utilities and so forth, I would look at that, and I think we can make an argument that you're going to have that cost irregardless And that's a fixed cost irregardless before you even turn on the lights in the morning. That's another rent cost.
So tons of questions. And I'm going to pull up a couple of these. Maybe we can just start going down the list here. One, quickly, when it comes to applying, I've got some good comments here, bringing up the point of like, okay, what if I can't go into my bank right now? What does the application process look like? Who exactly do you get in touch with? Are you talking with your bookkeeper, your accountant first? Are you getting your bank on the phone? What do you do?
You know, from my standpoint, we reached out to all of our tax and accounting clients immediately, because every single client has the potential of receiving this. This is something that is really, really, it's out there and it's available to all. The banks right now, as they are going through this process, they're trying to figure it out themselves. I have heard today, in speaking with some of the largest banks and people high up within these institutions, that it could be possibly an online type of submission. You deal with XYZ financial institution, they know who you are, you submit all of your documents vis-a-vis the internet into some type of portal, and that would be the application, and monies would be deposited into your bank account. Others are communicating that they are taking appointments, that we will go ahead and meet with you on an appointment schedule to ensure social distancing within the financial institution. Come, apply, and thereafter we will deposit monies in your account. So that is a very, very fluid conversation as far as the process, but the process is supposed to start. And I say is supposed to because there's email communications going back with some of the largest financial institutions stating the application will be online and we can submit it as soon as April 3rd. So that means it may happen April 3rd, but it also may extend into next week. There is no certainty as it relates to that today.
Right, and to those points, there's additional guidelines. If everyone goes back and looks at that, the agenda doc, there's some links here to more forms, but I've seen it listed that depending on who you are, your role, dates are staggered. So April 3rd for small businesses and sole proprietorships. April 10th for independent contractors and self-employed individuals. It's amazing to me that April 3rd is tomorrow, and all this is going to be magically turned on. I immediately have flashbacks like healthcare.gov. I mean, I guess one of the benefits here is this is being dispersed. It's not all on the SBA.
And that's why they're looking to go ahead and utilize the financial institutions. And the financial institutions are going to be paid by SBA for the administration of the loan. There should be, zero fees that a financial institution charge. There should be zero application fees. All of this is going to be covered by the SBA, by the government, and be paid directly to the bank.
All right, I'm looking at a few different. Oh, go ahead, Tom.
Joel, just clarification. Seen a couple questions on this. I had a question. Many MSP owners out there are not going to be regularly paying themselves on payroll and are going to be doing owner draws. Is that just calculated as payroll in this sense?
The answer is no. You know, when you're talking about owner draws, and this is really the government's way to say, if you have paid into payroll, we know we're going to get the payroll taxes back or a portion of those back. So the owner draws circumvents, if you're an S corporation or if you are actively engaged in an LLC. So we have to, there's various views discussions as to relates to that, but a typical owner draw that circumvents Social Security and Medicare, that is not going to count into the equation of what is your total salaries that's published in that spreadsheet. However,
can you make a recommendation?
In 2009, I'm sorry,
I thought you're done. Go ahead.
We're looking at the total salary that was taken by that employee, even if that employee is the owner of the company. And if you have an S corporation, there needs to be a very, very healthy balance between salary and owner distribution. And this is a way of the government trying to police that as well, saying, look, if you took all owner distribution, you paid nothing into the system. So we're sorry, but we're not going to reward you for that because you paid nothing into a system that has the potential of going bankrupt, right? So the salaries, wages only relates to what was on a W-2. But let's say some business owners pay themselves, and they pay themselves all on the last day of the year. They figure everything out, they bonus, they analyze exactly how much they paid. That will be on the W-2 and presented on 6. So that's really a case-by-case scenario, Tom. But the drawings is not going to be reflective as far as how much the government's going to give you as the maximum loan.
Now, would you recommend to people doing that they change that now so that at a later time they can take advantage of maybe an additional stimulus that comes out?
You know, depending upon the rules and regulations, yes, but I think that's a unique conversation that has to be had with each individual person. You know, that's not really a one-size-fits-all approach, but rather a discussion with each and every person as to their business, their dynamics. As far as that's a more intimate conversation on a one-to-one basis versus what we're talking about here as far as the application of the PPP. But the point that you're making is extremely valid, and depending upon the rules that may surface in the future, by having salary, it would definitely yield a benefit, as you can see here.
I just want to make a comment to people. We've said this in the comments for anyone who hasn't seen. So the spreadsheet that we sent around, people are having some problems saying that the formulas aren't included. And so we're going to get to address that. We'll follow up in our email that shares the recording and everything. We'll make sure everyone has working spreadsheets. And yes, the recording will be going out, if not later today / tonight, depending on where you are, early in the morning tomorrow. Okay, I've seen lots of questions about 1099s. Does it cover employees at 1099? We have another comment. I think people's questions isn't whether they are paid on 1099s, but whether if we pay subcontractors on 1099s, would that count as a payroll expense? There's a few other ones as well, but I'll let you hit those.
You know, the 1099 issue, yes, they are covered. But I think it's also very important to understand that depending upon the type of business that you are dealing with, if the 1099 individual is truly a 1099 and not for services, but truly somebody that is doing independent work without your oversight, without utilizing your equipment, your tools, your know-how, they're not reporting to you on a day in and day out basis, but somebody that says, hey, can you do this for me? And the person is given that task. Now they're off and running to do this work, and it's due in 2 weeks. That individual comes back to you. They may have done that work at 2 o'clock in the morning, the night before it's due, in their underwear, and they bring it to you the morning that it's due, and it's perfect. Here you go, business owner. That is a true independent contractor. And if we do have payments made to that type of individual, they should be included and therefore add to the value of your maximum loan amount.
All right, and additional, man, so many questions coming in. And let's see here. I'm going to get to another one right now. Okay, here's one, a specific scenario, and apologies, Joel, if what you said right now is already addressing this too. But what if you're a sole owner of a corporation, take out only distributions, no payroll info, so no 940 to go on? Can you still, can you get it and use it for rent or other things, including distributions? I think we mentioned rent, but Does that question make sense to you?
If you have a company and there was no payroll formed, the answer is no, you're not going to benefit from this program. Then the next program that you may benefit is the, that economic injury disaster loan program potentially. If you are a sole proprietor and present a Schedule C and you pay yourself as a self-employed individual, then yes, you would qualify for such, because you are paying Social Security. You are paying in a section on the tax return called other taxes. You most definitely are paying your share of Social Security and Medicare. So again, it's on a case-by-case basis that you really need to advise and speak with your tax practitioner professional.
So we're getting a few questions here about people who have already applied to SBA loans, maybe perhaps the emergency disaster relief. Are they able to, how is that in relation to this? If you do one, can you do the other? Are you not able to do that?
So in the economic injury disaster loan, there is a grant of $10,000 that can be awarded within a 3-day period. That grant would come off of and reduce the PPP if you also qualify for it. So you can't double dip and get both, the grants and the PPP. The PPP will be reduced. Or if you do the PPP first, that of course would have an adverse effect on the disaster, the economic injury disaster loan. The second thing is the economic, injury disaster loan. That is truly something that, okay, there's certain guidelines, there's certain guarantees for less than, or no guarantees if it's less than 25,000, but that is truly a loan. And what's also extremely important on the PPP, the application of the PPP, they're very, very specific. And they ask you, have you applied for another loan associated with COVID-19? So from my vantage point, I feel, and what I'm advising is to go ahead, apply for the PPP, and then if we need additional resources, let's apply for another SBA product.
And we've got about 5 minutes left. I think we can certainly extend if as we have a lot of questions coming in and people still want to be active. But with that in mind, there's a lot of individual specific questions to certain situations. Just a reminder to everyone, Joel's been kind enough. He's decided that he's quarantined and he doesn't have enough work to do. He's happy to talk to people one-on-one. So I guess that means we should provide people with ways of doing that. We do have a link in the agenda doc to Joel, to your website. What's the best way for people to get in touch with you, though?
The best way of getting in touch with me, you can email me at joel@joelfriend.com. You can phone me in the office at 954-704-1040. If you do email me, please leave your phone number. I really enjoy conversing verbally than over an email, because I believe one question, especially in a topic so fluid, will beget another email and thus so forth and so on. So I'd rather have a conversation versus going ahead and having a huge email correspondence back and forth.
Okay, great. And we will hit on a few other things. I think more general types of questions here. I think that another theme that we're hitting on. Well, I guess, sorry, one more thing I wanted to point out is going back to the agenda doc. There's a few other resources I wanted to call out. Again, everyone's got access to that. You can go down to the bottom, and below all the agenda points, there's a resources section. And that's got some of the things that we've been referring to. It's also got some PDFs from the U.S. Chamber of Commerce. They put together some more fact sheets about this, about some of the things we've covered. There's also a great spreadsheet that includes a comparison between the PPP and the economic disaster. I'm going to get it right one of these days, Joel.
It's
economic
a tongue
disaster
twister, I know.
recovery loan, right?
Economic injury disaster loan.
Thank you. So check the spreadsheet there, or the agenda doc for a comparison for that too. Before we head off though, Tom, you've been monitoring all the Q&A and the comments. Are there any other big questions that you want to direct to Joel?
I think a lot of people are asking also about home offices and how they can allocate part of their rent or mortgage.
You know, that's a very, very specific question that needs to be discussed on a one-to-one basis. I think if a person rents their home, that's a totally different story than if an individual has a mortgage. I am of the opinion as a tax, practitioner that I do not like home offices. And it's not because there has never been a case to my knowledge that has lost at tax court by placing a home office. The reason that I don't like to do that personally, which is a whole different topic from a taxation standpoint, is because when you sell your home, you have what they call economic recapture. And now, while you're supposed to sell your home and have the ability, if you're married, have a $500,000 gain exclusion, if you do use your home as a deductible expense and get a little bit each and every year, when you do sell, that percentage you will have to pay income tax on. So because of the economic, where you have to basically add back the amount that you benefited all these years and pay tax on, I don't necessarily feel it's wise, but that's really a case-by-case basis based upon the individual's tax situation.
And Tom, just from your perspective, you going through everything you went through in 2008, is there anything other kind of to end on here? We can go into more specific questions if we have time. I just wanted to get your thoughts. Any last kind of like big picture thinking around this that you would share based on your own experiences with 2008? Oh, maybe lost you there, Tom.
Oh no, 2008. My thing is on this. I just wanted to comment on Joel and what he said before about home use. My experience as a business owner and a previous owner at MSP is to be very conservative and not try to deduct things related to my home when it comes to the business. I had a number of people I knew that didn't do too well with that, and I don't recommend it. In terms of other things in 2008, my big thing goes back to, and we talked about in the previous webinar, is just being very conservative here, cutting back on expenses. I've seen some people in here that are talking still about putting in things like their RMM and AWS into this formula. I would really watch out with doing anything that isn't strictly by the books. Even though this seems very cut and dry the way it is, we don't know what the government's going to do later on or how they would come down on things. And I would just, as a business owner, be very conservative in what you ask for and how you use that money.
Please understand also, and I definitely concur with what Tom is saying. I echo those sentiments exactly. The one thing I would say is, even if you use expenses or we don't have enough expenses to consume what the IRS or the government here, the SBA, is going to provide, we can either return that money or it's going to be based, depending upon the dollar amount, at a very, very low interest rate. And we could use that on any expenses that we have just to be able to get through the next phase.
Yeah, we have a great comment here. Never give an attorney or accountant cause to ask you, what were you thinking?
Yeah, I think that's kind of my point there. I've been asked that before, so I don't want that to happen on me.
Maybe what we can do too is, I think because we're running short on time and there was a lot of questions we weren't able to get to, Joel, I'm going to wear out your generosity here, but I would love to we're going to have all these questions captured. I'd love to kind of send them to you. And what we can do is, everyone's got access to this document. As you can see, we're updating it live. What we can do is have a separate section with questions we didn't get to, and we can have some potential answers there. If we're not able to provide, there may be a lot that the answer is, it depends. That's a very specific question, but maybe we can try to get to what we can.
I'm sure there's a lot of specific, questions that are directly involving a certain fact pattern. If there is a question that hasn't been answered, if there's a topic that you want to discuss or understand further, then I truly welcome you to give me a call. I think from that standpoint, it would be a lot easier. And I think one question is going to just spark another, or one answer to a question will spark another and another. So we'll do our best to be able to answer those questions that have not been addressed. But if there's something specific, then please reach out.
Well, thank you again, Joel. I mean, that's so glad we were able to get you on. Really thank you for your time. And thanks everybody for joining too. Yeah. This is great. I mean, this is becoming kind of an ongoing series for us. For this session, obviously there's a sense of urgency here with the deadline happening tomorrow. Hopefully this gave some people, pointed people in good directions and gave people some insights and information. Again, we'll share the recording as soon as that's available. We'll try to answer some more questions. And we're going to keep this series going. So next week, I think Tom's already been talking with several folks who were involved with last week's discussion. Tom, you had an idea for centering some discussion around changes to contracts, maybe talking about more things involving cash flow. Really, this is a series that we're going to open up, and as long as people find it helpful, we'd love to continue getting everyone here and having discussions like this.
Jonathan, yeah, what we hit on last week was that there's going to be a lot of questions from clients about backing off on contracts, reductions, and that kind of thing. What I have is a series of clauses that are written by an attorney and myself together that you can use a whole or in part in your contracts or as addendum to your contracts that will help you just make sure you put it down in writing the right way, what you are giving your client in terms of relief, different payment terms, that sort of thing, so that you're protected. So we're going to go over that next week and then kind of have an open forum, I believe, as well, in addition to that.
Yeah, because I mean, one of the great things is in the comments too, this just came up. As much as, I mean, this week was special. We have Joel, who provided a ton of insight and valuable info. But in addition, I mean, the comments we're getting, you guys are answering your own questions and chatting. This is really, just thank everybody. I'm very grateful for everybody for attending, taking out time during this crazy time that everyone's dealing with. This is really helpful and informative for us too. I guess the final kind of wrap up note, Joel, I don't know if there's anything you want to kind of reiterate. One thought that I had is thinking about this as another tool in your tool belt in terms of making sure that you're putting your business in a solid state for you, your employees, and your clients. You know, I think everybody is very proud of what they've built and proud of doing things the right way where they don't need help from other people. But this is out there and this is a tool. And it seems like, I'm just glad that, Joel, we had you on board to direct people, to give them the information they need to decide what's best. And if they want to take advantage, they can.
I definitely welcome the opportunity, and I definitely enjoy participating as such. It brings me back into the classroom where I taught actually for, I think, 10 or 11 years. But as my boys got older, I kind of scaled back from my teaching. I would be more than happy to come on at other points in time, whatever I can do to support you and the organization and all of the MSPs, I will definitely be happy to. I do feel, however, as we all, I think, have stated, there should be no reason why people do not take advantage of this program.
Great. Hey, Joel, do you think you can throw in the chat real quick your contact information? I know we're going to send it out otherwise, but I've seen probably about a dozen requests for it.
Joel, if you're okay with that, I actually have it handy. I can just dump it in right now.
All right, put it on in.
Okay. I'm giving, just to make sure I get the phone number right, 954-659-8802.
No, let's go with 954-704-1040.
You got it.
That's definitely the
And
best.
Joel@joelfriend.com.
And Joel@joelfriend.com.
Perfect. Okay.
And my recommendation, please, if you do email me, please place your phone number or contact information in the footer. I know people do like to engage via the internet and so forth. I just find this type of topic with the fluidity, it's much easier, more efficient, more effective to go ahead and have a conversation.
Now, is that a cell phone or is that a landline? And are people might text you if it's a cell phone?
No, do not text me on that number. That is a landline, but it will be sent to the office or to my phone, depending upon the times. But the office will definitely, send all information to me. We have a staff of 10. So whatever we can do to help.
All right, great. Well, thank you again, everybody. Things are changing very rapidly. I hope everyone's staying safe, staying healthy, and yeah, we're here for everybody. It's great to see everybody here for each other too. Thanks again for joining.
A sincere pleasure to be part of it. Thank you both.
Thank you.